All right, what's up, everybody? It is just after 11 a.m. Central Standard Time here on Friday, the 10th of January, 2025. I'm Christopher Inks with Texas West Capital. I got FiboSwanny sitting in the wings, just waiting to come on here. You heard me correctly. FiboSwanny, he's getting snowed in up there. Weather's not too bad here. It's just cold and rainy in South Texas, but about 3 hours north of me in Dallas, they ain't having no fun with all that snow. So I'm pretty happy here. Hey, hopefully y'all are doing all right. Make sure you hit the like, hit the thumbs up, hit the subscribe, leave a comment, all that great stuff. Unless you leave a comment that kind of proves you have like a 2 IQ. If you come in just being a jerk, that's quick, fast to get deleted. Quick, fast, easy way to get deleted. There's nobody got time for that nonsense. You ain't special. Don't come out on social media trying to get attention because your mama didn't bottle feed you, or maybe she bottle fed you too much. I don't know. Stop your nonsense. Stop your nonsense. I can see Fibbo laughing in the background there. Hey, we're Gen X, man. I'm telling you, we don't give up, right? We're going to say what's on our mind because that's what's up. So anyway, do all that. There he is. There's Mr. FiboSwanny. Check it out, guys.
What's up? I'm gearing up for Snowmageddon 2.0 here today. So yeah, we got 10 inches the other day, and we're probably gonna get about another 5 again today. So, and for Kentucky, you know, that's not the best thing in the world for for the somewhat of the South. We're not quite south, but we're kind of in the middle.
Just stay inside.
Yeah. That's all I've been doing, staying inside and doing charts.
Hey, and nobody complain about if he looks a little dark here. As you can see, he's got nothing but windows behind him, and he's got sun coming off all that snow. So his light is working overtime to try and beat that, and it's having a lot of difficulty. So
yeah, I tried to get it as light as I could. I got it. That's what I got so far. So
you have to deal with it, folks. You got to deal with it, right? All right, man.
Good times. Good times.
It's great times, right? So yeah. Lots of stuff going on. I know we've got some good stuff going on at TWC. For those of you that aren't in there, if you're in there, you've heard about it a little bit. I've got some stuff I'm working on. I've upgraded the platform that we're using. It's going to give us the ability to do even more. We've got more stuff coming in. It's just more and different kind of content coming in. Really going to blow up TWC this year. While everybody thinks the market's crashing, guys, it's not. It hasn't crashed. It's taken it a month just to get down like what, 8-9%, something like that right now.
Everybody needs to look up the term correction and crash. Yes. There's a big difference between the two.
But all we ever see is crash online, right? It's
1% move. 1% move. We're crashing. It's going to zero. Grab your kids, run for the hills.
That reminded me of that meme video that went out. Remember the guy said, "Hide your children, hide your wife, or hide your husband." Yeah.
Mm-hmm.
Anyway, stop reminding me of stuff like that. It's not stuff to talk about here.
But Gen X, yeah, we are Gen X for sure.
Hey,
we can take it. We can take it.
Yeah, no, Bernardo had a question. He said, "Hey, Chris, where is the trailing stop info in TWC? In case you guys don't know, I teach the absolute best trailing stop that you could ever learn. Everybody out there teaches either, a static trailing stop where you leave it so many percent or so many dollars behind your stop. Others do it as a dynamic based off like ADX or something like that. You're looking at deviations. Man, don't do that. If you come to TWC to learn one thing other than proper risk management, which I guess this would be part of it, learn the trailing stop that I teach. Bernardo, you can get it. Go into the educational tracks collection. Go into the price action space. That first tab that has the recording of all the live streams that we've done over the last few years is in there. Have it filter so it shows you from the oldest ones, the newest ones first, and it's somewhere right in there in the first couple of months, I think. Just look for the trailing stop loss. You can also type it in the search box, I guess. I make you go through all these steps. Just type it in the search box there, and you should get that. But absolutely everybody should know that, because the thing is, it compensates for you not knowing anything about trading. So as long as you can do at least proper risk management, if you use that, you don't even have to go, oh God, do I need to go long or short here? You can go long or short, and you're going to catch the trend. If you don't catch it right away, you'll catch it maybe a couple of moves into it. So, but proper risk management, you're only going to lose a couple of percent in that. And then once you're on that trend, you're going to make it all up probably in the first trade, if not the first two trades, utilizing that trailing stop. But it can be used on any time frame from the 1 minute, hell, even the 30-second, if you're stupid enough to trade on the 30-second and make it because of fees, right? But all the way up to the monthly, the weekly, the daily, and all that kind of stuff. So anyway, just thought I'd put that out there. It's something we do make available. And by the way, also, when you come in, you jump in on that. This is all on the $97 all access pass, which, by the way, gets you all the group coaching I did that I've been, charging $4,000 a year for. It gets you FiboSwanny's threshold theory. It gets you the TWC Traders Club, where you have my trades, Fibo's trades, Andrew's trades, Vince's trades, and all our updated analysis throughout the day. I mean, my God, guys, you don't actually have to go anywhere else. But also, what you can do is go into that same area where I was talking about in the price action, filter to the first months that we were recording and doing all live streams and everything for that. And you're going to find about 40 or 45 different strategies for entering a trend. So a lot of times people have a lot of difficulty. The thing takes off like, oh my God, I didn't get in. It's really going up now. How do I get in? Literally 40 to 45 different techniques, strategies to actually help you get into a trend that's going on there. So you can combine that with the trailing stop loss, and you've already got something that's going to make you more money than you've probably made trying to trade over the last year. So that's the easy stuff, right? That's the simple, quick stuff you can learn. So anyway, for your question, there's your answer. Anybody else that was wondering, guys, you can join us at TexasWestCapital.com. Price will be going up. It will be going up here in February. But if you're in at the $97 right now, we're going to grandfather you in with it. And as long as your renewal continues to come, you'll continue to get the $97. Now, once you screw up and you don't have enough money on your prepaid card that you're using, because I understand it's how a lot of people, it's safer to buy stuff online that way. There's nothing we can do to get you back in at that lower rate. So you have to pay the higher rate. So just make sure that your card has enough on it, and that you don't miss the renewal date and whatnot if you're doing that. That's platform specific issues that I have no control over, guys. Okay. Excuse me. Anyway, let me see here. Andrew Bennett says he loves it. FiboSwanny. Gen X grew up playing in the dirt. We did. I think we grew up eating dirt too.
Yep. Drank from the garden hose.
Drank from the garden hose. Yeah. I don't know what kids say. They're like scared to do that. They got to drink out of their water bottles, right? They're $4 or $5 water bottles.
Yeah. Well, I put my Brita filter on the end of my hose before I drank it. No, I'm just kidding.
God, I hope not, man. Come on. If you didn't get anything from before, you're going to be fine now, right? We've done 50 years on this planet. I wanted to know whether or not Fibo did a rebrand. Well, just while it's snowing out there. So, hopefully y'all are having a good time, and hopefully y'all are being safe. If you're in California, near the wildfires and whatnot, please be careful out there. We're thinking about you. If you're anywhere where it's snowing, I'm in South Texas. I'm thinking about you. I'm thinking that I'm lucky I'm not in that. My son's kicking me because he wishes he was. I showed him some pictures of Fibo's backyard and porch and everything there. And his 13-year-old, he looked and goes, wow, man, I would build an igloo if I was there. And then he starts describing how he would build it with all that snow. So
he would have a field day, man. He'd be out there. He would have like a whole fort and igloos and a whole freaking settlement going.
Kids, man. At my age, no, thank you. I'm staying inside where it's warm and no snow. I'm good.
Yeah. Actually, you remember those old playground things that they don't allow anymore because kids are wimps? But those dome things used to climb up that were like kind of
yeah.
You know what I'm talking about?
Yeah.
Well, there was one that I grew up in a lake effect area up north towards Chicago, and it would snow all the freaking time. So what we would do is we would throw tarps over the top of that and then let the snow drop, and then it would automatically make us a nice igloo. It's pretty cool.
So there you go, guys. Things that you will not do today that you've missed out on because you're not part of us. I
don't even think they have those things anymore.
They don't. It was too dangerous, right? Kind of like those metal slides we used to. By the way, I'm from Texas. Summer's 100 plus. Metal slides in the summer heat. They didn't stop us from sliding down them, but it sucked every time.
Yeah, I'm sure you lost 9 layers of skin.
All right, let me see here. Let's see. Well, real quick before we jump in there, Mark says, as long as we never see Fibo bikini, no matter what the weather is.
Yeah, if it's 110 outside, I'm not changing it to Fibo bikini. There's no way.
We appreciate that, man. We appreciate that. I was about to pay you not to,
Yeah.
Let me see here. And Bamboo, what's going on, man? He says, what up, gang? Anybody scared or ready for some more uptime after this dip? Everybody's scared. The news is negative as it can get. I'm looking forward to seeing the masses be wrong once again. Yeah, so a lot of good stuff looking on. Let's go ahead and pull up Fibo's charts here. We get going on some talking about price action.
Yeah. Let's get rocking and rolling on the 4-hour here. I got a few charts I want to show on BTC for some different time frames to kind of get a gist of what I'm looking at.
Better.
Here.
That's what we bring
here for. 4-hour. Let's start with that. I put this trend line in here to kind of show. I do this all the time, and I know you see it. You take the furthest point from the trend line itself, and you take the same rate of change, and it matched up pretty nicely on this low here at 91.3, or it's a little bit less than that, but I put an order in at 91.3. It was 91.271 is where it ended up, so I just rounded up to 91.3, which actually hit me, yesterday. Little dip got me filled and got a little nice bounce from it. So looking good from that aspect. Definitely not out of the woods yet, but I did like that target hitting, and it was also hitting inside the previous zones, Fibonacci extension levels that I like to look at, and that was between 90,500 and 91,007, and that zone and that low kind of fit in there nicely. And that trend line break all matched up. So to me, that was a really good spot to buy while we're in the bear zone. It definitely wasn't getting into oversold conditions. We're definitely not out of the woods yet, but that was a good spot for me to jump in. And there'll be some other things on the other charts that give you a good reason on why to get in that area. Now I put these orange fibs in here just to show this latest leg. And it wicked down here and, testing the 61.8% level just of this leg. But it's also, it actually closed just above the 38.2, which actually was a good sign to see that buying interest off that wick and actually closing that 4-hour candle there. Now we're kind of, dojing around that 38.2 on this next 4-hour candle. But there's two ways that you can approach this. When it comes to the way I approach the bear zones, if you bought here, you could sell back out at the shallow fib, which is resistance in a bearish in a bear zone, and then rebuy on dips to the downside. But that kind of leads into risk management and how much exposure you really want. I don't have it. I got stopped out on the bear zone up here on my 4-hour positions. So I didn't really have any other positions on besides the 91.3 that just hit. So I'm not really exposed much. So I'm willing to kind of take the risk to where I want to hold that 10%. And then when it gets into a new bull zone, hopefully, I'll add 10%, and then I'll take that dollar cost average as a good foundation to give me a good average going into a new trend. And hopefully, so if that bull zone hits, that'll be a good signal that the next leg up is happening. And so I'm actually holding on to that 91.3, and I didn't sell it out at the shallow fib. Now there might be some guys in my group that actually sold it, maybe want to rebuy it on the way down. It all depends on risk management, your exposure, and all that. So since I don't have much on, I'm just going to hold on to that. So that's really what's happening on the 4-hour. We'll just have to kind of see if we can continue to get some buying action in here to get us rocking and rolling back to the upside. So flipping over to the daily, another reason that I liked the 91.3 area was if you look at the bull zone that we've been in here on the daily for a while, we get this nice bull run to the upside. The shallow fib here is at 89,588. I actually have an order in at 89.6 case that thing wicked down and kind of get me long on the daily. I'm still long from way back when. I sold a whole bunch of them, but I left 10% on just to have some exposure on the upside. And I think I'm 89,450 is where my buy was on that. So I'm just willing to kind of hold that. If it goes into the bear zone, then I'll just take a little bit of a loss there and then look at much lower pricing. But when you look at this, the bear zone here is at 91,270 or right around that 91.3. So that gave me a little bit of confidence of, okay, the trend. So when you look at that 4 hour, with the trend line objective hitting there was a low here and it's hitting inside the fib extension. All of that together was saying, hey, this could be a spot to buy. And if this wants to hold the bull zone at that 91.3-ish area, I want to be long holding that support on the daily. Right now, the ADX is kind of low. It's right around 17. Not a lot of momentum one way or the other. So we could see some, more consolidation in this latest range that we're in. But I do like that it held and got bought on the 4 hour. Would have been nice to wick all the way down to the 89.6 and got a little bit more, but that's okay. I don't want to be greedy. I'll just go with the plan. But that's what I'm doing here, kind of seeing if this holds. And then that 10% that I have on right now still has that target up around that 118,000. That was the target that I had. I cleaned up the chart, but if you went back a couple zones of when that was bought, that target remains. So I just kind of left that on there. And it was a trend-based extension. And it'll show up a little bit easier on the weekly on why I started here to do the trend-based extension. But that gives us that 118-ish target for taking profit off the long I have right now. So that's the daily. So so the 4 hour and the daily working together is what I really liked, and that's why I bought at that 91.3. Now going on to the weekly, few things in here, definitely in the bull zone still. A couple of things I'm looking here is I'm still watching these lows before the rallies, and then working up on these timings. So right now we should have an interim high somewhere in this first quarter, the January to March timeframe. So let's see here. Let me see if I got that on there right. Yeah, the two trend lines I'm looking at. This one right here is going to be a definite support guide going forward. So anything that comes down into this area should be majorly bought. But the shallow fib right now is at 75, which could come into play if that daily ends up going into the bear zone. Then you could get down into the 70s, maybe into the low 80s, if that daily ends up breaking and getting into that bull zone or bear zone. But of course, if this ends up going into the bear zone, you do have to have 3 daily settlements underneath this 89.5. So it could go bear and go below that 91.3, and then actually get back above it and then be in the bear zone, but not really trigger an overall bearish movement. So it'll still kind of be in that area, kind of that limbo of consolidation between the two. And that's why I call it threshold theory and liminal space and all of that, because you could get into that area right there where it's not technically bearish, but it looks bearish, but it's not triggering bearish. So that's something to kind of keep an eye on there too. But a couple other things on here. The other trend line was this break to the upside right here. And I take the fibs from trend line breaks. So when this broke right here, if you take the fib extension, the trend-based extension off of this, and take the low that's hit so far, which was at 91,187 on the Coinbase chart here. The next level here is at 117.9, which makes sense right around that 118. And then we get into the 134 and then 140s, 150s on some of these extensions. So I still think we can get up into that minimum 118, but I still think we can get up to 120, maybe even 125, maybe a little bit further on this high that we should see in this first quarter. And then maybe we have a correction after that. Maybe it goes further. I don't know. So baby steps is what I'm going to take and kind of watch it from there. But the other thing is if you take these orange fibs here, the 38.2% level off of the break of the trend line I take a lot of fibs from trend line breaks because I'm all about that psychology change that's happening during a support and resistance level. And if you take that fib level from that point, and then you look at the 38.2% level, it's at 91.8, not quite 91.3, but that low that we saw here on this last candle was 91.187. It did dip down underneath it just a little bit, but I do like the support that I'm seeing at that 38.2% level, because if you get anything that kind of ties into that early shallow fib, I call it, holding support, should be an impetus for another nice run to the upside by that 38.2% level holding. So far it is, and it's working its way up. So another reason why I was kind of comfortable going long at 91.3, at least take the chance that support could hold. And of course, risk management is in there. If it ends up breaking, take your little bit of a loss, and then find some other targets on the downside. But so far, everything on this weekly is looking good. I like the timing of everything. Everything's looking really good that way. Now, going on to the monthly, just showing, this is just an easier way of seeing some of those levels that I was just talking about on the weekly. The one thing that I like here, when you take these fibs here, if you take from the high to the low, and this was the high right around 69 and the low down there at 15K. You look at these fib extensions. Let me put this over on the other side so you can see here. Let's move it over to the left. There we go.
To the left. To the left.
Yeah, to the left, to the left, to the right. All right. So when you take the extensions here, you got it between 83.5 and 91.156. And we had one monthly settle above it, and we had two monthly settles above it. Now I'm waiting to see if we can get that third settle, because for me, I'm always about 3 periods when I'm looking at these charts to give me the signal that officially moved over from resistance back to support. So if this gets this month and we get this month to settle above 91.156, then this 141% level becomes support, and then the 200% level becomes the target. And in this case, it's 122.5. So
Nice.
that's another level that a lot of people are looking at also. So I'm marking this as a resistance target, but only if we get that settlement on the monthly above that point, which it should, because the 91.3 should hold, right? No, I'm just kidding. I'm just hoping that it does, because everything on the pattern looks like it should. Now, this 200%, we had the 100% go to a new high here. The 200% was marked as resistance. Definitely wicked up a few times right there around that 98.2, 98.3. The whole 100K area hit some resistance here on these wicks here. So right now we got this little area that I'm calling kind of this liminal space between this 91.1 and 98.2. So that's kind of that consolidation that we're in. Now, if this ends up holding at the end of the month, then I think this resistance is going to get busted out. We're going to get enough buying interest to push us up through there. And then that's where that next resistance becomes the target. And then once it gets beyond that, then then the 100%, then the 100K kind of becomes that support. But we'll have to kind of see how that works out. But I just want to kind of show this because it gives a little bit more of a easier view of the support level that I'm looking at here with that possibility. Because if you ever look at any of my stuff on any of the time frames, it's these fib extensions between the 127 and 141 that are very key to me as that first level of defense of stopping the trend and reversing it the other way. So if it actually gets above that point and gets that to a support instead of resistance, it really opens up that resistance to the 200% and gives you a high probability of actually getting to that point. So if you ever do some historical analysis and you look back and you take some absolute highs and take some absolute lows and you look at those fib extensions, if they held, you can see they reversed well. But if you got those 3 settles above that 141%, then you can see if you look back and maybe you'll kind of see that if you see the last 10 or 11 of them and 7 out of the 8 went to that 200%, then you got a good probability that it's going to move up to that level. So that's kind of how I approach that and just kind of watch it. So let's watch the end of this month. I mean, there's still a lot of time before we get to the end of January, but that's something to watch there. And then I always like to inverse it sometimes to kind of show how well it looks when you throw it upside down. So if we end up getting this and it holds here, just looking at it on the reverse, that will turn into resistance, and we're going to magnet right down to that 122 on here if this ends up holding and on that area. So this 91.1, 91.3 area, pretty significant, and that's why I really wanted to buy that level with that 122 as a target. Now I got some profit taking it around 118. So if it goes to 122 and I profit at 118, that's all right. We'll figure out ways to get back in and all that kind of stuff. And then the last one on BTC was just on the timing, which I think this is just kind of crazy, but it's just the way it works and the way crypto has been doing it. I don't know if the cycle is going to continue because things are way different now than they were back then, but we'll find out. But if you look at the halvings and you look at the timing of the highs and you look at the timing of the lows, it was 17 bars. So sometime during that month in 17 bars, it hit the high, and then it hit the high. And then if you look at here, you got a possible another high here. And that comes in at October of 2025, which that's where I think, you have your best chance for a high there. And then once you got to the high, it was 12 bars to where it made the low. And then here it was 12 bars when it made the low. So if this actually makes a high here in October, the low would be coming in at October of the next year on that year of correction. That if it followed the pattern, that's what it would do. So you got this, weird pattern, I guess you could call it. And then you also got the timing of the lows here too, where you got the low to a low to a low. So that's where that's where these lows come from. And then the weird thing is the low ended up 17 bars from before the halving. So you got this weird pattern going. But if you follow the pattern and everything's looking good so far on the upside here, we're still on that movement to get that high for October. And I think I have anywhere between 190 and 210 as the possibility of that high coming in October, but a temporary local high in this first quarter somewhere between 118 and 125. So that's the way the timing's kind of working out. Now, again, this is all macro look, don't go run out and take a mortgage on your house or anything. But if the pattern holds true the way it's been going, this is a nice guide to watch. Not really I would trade off of it, but at least it's a nice guide of timing of when these things could happen. And if things are happening earlier or later than the timing, then you know that you need to go back to the drawing board and kind of redo your analysis to see what's going on. But until then, I'm going to ride it until it stops. And that's what's happening there. So that's what I got on BTC. If you want to show some stuff.
Yeah, real quick here. Troy was asking. I think you just answered this question. Basically, Troy. Fibo doesn't do the Elliott wave. He knows Elliott wave. He doesn't use it specifically. He uses basically the same idea of what he does. But just approaches a little bit differently.
Yep.
So basically, he's looking for that move up toward that, as he said, that 118, 125 level, then a pullback. And then we get the rally up there to maybe, would you say 180, 210, something like that, maybe? Yeah.
And I had a chart. I don't have it here, but I had a chart that I showed on another show. If you go back and you look at all the runs up, you can go all the way back to the beginning if you want to do all the analysis. But every time you had a nice little leg up, and I'm just talking about your visual. You don't have to go to every single one, but your visual of seeing that made a high, that made a low. And if you take once you made a high and then it corrected and then it came back and made a new high, and you can see where the highs make new highs. If you go all the way back, you can go back 5, 6, 7 years if you want, and go back. Every time it made a new high, it got to the 3.618 extension every time. Now, as a minimum, sometimes it went further, but every time, all the way since the beginning, it hit the 3.618. Now, since we made a new high at the 100 over the 100K or what the high was before, that new high comes in around 209. So that 3.618 is at 209. So that should be the minimum of the high on this leg if it wants to keep the same pattern that it's hit the entire life of Bitcoin. Not to say it's going to happen again, but
it does.
Yeah, but the pattern's there.
Yeah.
It's just like someone's like, well, it hit red on the roulette wheel 14 times in a row, so that 15th time's got to be black, right? It just got to go the other way eventually, right? But well, that's just an interesting pattern to me. So that's where that 210 kind of comes in within the range. Now, when you look at my threshold theory and everything I do on the timing of things and the patterns, that's where the 195 comes in. So I'm going to put it in at 195 where I'm going to take profit, but that 209 is something to kind of look at also on that fib extension. So just something to look at there on answering that question.
Well, let me just throw this up here real quick. This is something I was talking about with my with the people there in Traders Club and everything today. For me, we had this rally up overnight here into this up into the I guess just prior to the release this morning. This was when we had the jobs report release, which, by the way, guys, if you weren't paying attention, came in huge. We were looking at about 156,000 jobs added about 227,000. I think it was something like that. They were expecting unemployment to remain at 4.2 as it's been the last 2 months. It dropped to 4.1. So if you're looking for the Fed to lower interest rates anytime soon, I don't think it's happening. Right now, the Fed is looking at maybe one interest rate drop this year to lower it maybe one time this year. But that's the way it sits at this moment. The economy's still running strong. Jobs are still looking good. And, if you're going to ask, oh, but aren't the jobs always revised down? Sometimes they're always revised because of the way in which the information is collected. So they're revised. I've gone over this before. They're revised the initial month, and then they're revised like on the quarter. But if you look at it, even the last surprise the upside, which was November's numbers, we just had December. So November's numbers was the huge surprise to 250,000 or something when it was supposed to only be 120,000 or something like that. It got revised down to 227. So, I mean, yeah, it got revised down, but it wasn't huge. It was maybe 20,000 jobs, 30,000 jobs. October's numbers, which were really low because of the two hurricanes and the strike that was going on at the time. Remember, it came in like 12,000. Well, it was revised up to 38,000. So sometimes they're revised up. What I'm trying to get at is
the port strikes, right? Is that what you're talking about?
Yeah. What I'm trying to get at is stop with the government messing with the numbers and they're just going to revise it down. And it's a very simplified way of looking at it, and it's likely to lose you a lot more money than make you, guys. Just understand the way the numbers are done, as I've explained on a previous show here. The way they're done, there is going to be revisions. The BOL says, or the what do you call it? The Bureau of Labor, they actually tell you in there when to expect the revisions and that there will be revisions because of the way in which the information is collected. So it's not like, oh, they're trying to mess with you or whatever, and all of a sudden they're just, no, this is something that's always happened, okay? But what I did was, so we had this drop this morning, and when you go in here and look at this, this is one wave down, this is A, B, C, D, E, this is a triangle, and this is another wave down. Triangles don't come at wave two. So this can't be a 1, 2, 3, 4, 5, which would give us a leading diagonal basically here. It can't be. This has to be an ABC or a WXY here. So 3 waves is corrective. Then we bounced up 3, and guess what? 1, 2, 3 waves more. So what we have is 3 waves down, 3 waves up, 3 waves down, which suggests this is potentially a WXY down here. This is the 78.6, or just beyond the 70.5 retracement right here. So what do you need to do? We need a breakout above this one right here. This is the Bitcoin USDT chart on Binance, but it was this rally up this morning after the initial drop. That is 94,680 and 76 cents on here. If we can break out above that, that locks this down as 3 waves. That makes this corrective. That suggests this is either A, B, and we'll get a C, or it's a 1, 2, and we'll get a 3 up. So getting through that level, what I'm trying to say, signals that we should be breaking out higher here, at least toward the 96,344 to 97,346 area, if it's just an ABC, and then we'll head down lower. Or if it's 1, 2, and 3, if the bottom's in, we'll be looking closer to 98, 991 at least for the third wave up. So I just wanted to kind of get you this is a 5-minute chart. I wanted to kind of get that in there for you so you understand what I was looking at this morning as we pulled back down here into, this 15-minute pivot here and dip down below here, right there between the 70.5 and the 78.6 retracement. We got the good bit up. On that 5-minute, we had this huge bullish divergence off those two lows this morning. So we just need that to break out higher to keep it going.
I like the possible 1-2 with it looks like it's setting itself up for a third wave extended. So you'll have a 1, 2, 3, 4, 5 within that third wave.
Yeah.
That's the way I'm seeing it, but I don't know. We'll see.
I
like the one so far. I like the 1-2 if it holds, and then the 3 would be very nice.
Yeah, it'll be a great move there. Again, we just need that move up through that level.
Get above that high.
We're going to break out there. And then that does definitely set up, the potential that maybe we just, swept that liquidity down here.
What was that level again?
Right here. Which one? The 94,680 and 76 cents on this chart.
Okay.
So on your chart, let me see here. Is it this one right here? On your chart, your Coinbase Bitcoin USD chart, it's 94,675 and 71 cents.
Yeah, that's one I was looking at. Yep. Okay.
Yeah. And it looks like it may want to do this here. So, you can look to potentially get some upside there. I of course want to lean higher up there, but we need to definitely get to see some good. For me personally, I want to see the hourly pivot sits here around 96,291 and a half. So I want to see on the 1 hour or 4 hour chart, I want to see a 1 hour or 4 hour candle break out impulsively above and close above that level to really kind of say, okay, that low may be in. And then on the daily time frame, I want to see a daily candle impulsively break out and close above the daily pivot at 97,481 area. If we can do those two things, we should be heading up to new all-time highs. So those are the really kind of levels that I'm looking at as we kind of set this up further.
And that's good because your signal will come a little bit earlier than mine to kind of help solidify the low. I have to get up to about 96 and some change for mine to actually trigger to say, hey, the low is got a much higher probability of the low being in. Yeah. So you're going to trigger a little earlier. So I kind of like that. Kind of gives, I like having a little bit earlier signal than I see at the moment. There's still kind of confluence there. It's just you're going to be in a little early. Your signal will come a little earlier than mine, so that'd be nice if it happens.
But it's good. It's good when they're coming up there around those same areas, though. We always talk about that because that usually works out the way we're looking for when it does.
And the weird thing is my level comes from a way different look than what you're looking at, which is kind of cool.
Yeah. Exactly. See, guys, we talk, and we when we kind of have those same general areas, the confluence in target areas, as far as reversals or targets or whatever, we kind of get all giddy and excited like little schoolgirls, and we may or may not add a little bit extra to our positions in that point, but yeah.
Off the books, though. We won't talk. Those positions are not in anything.
Exactly.
No, I'm just messing. All right. What next? I go through a couple other stuff. Unless you got some other stuff on BTC.
Show them what you got, man. Show them what you got. They're here to see your charts, man.
All right. Ethereum. Bear zone. Ethereum. Actually went into the bear zone. It actually hit my target that I had right here, and that was at 32.57.75. And that was a buy. Now, and again, like I said before, like when you get into these 127 to 141 levels, that's your first line of defense of a possible reversal. Or if it gets 3 settles underneath the 141%, that's when the 200% comes into play. But so far, I got the buy in there, and we had one red candle that went underneath the 32.29 here. But that second candle actually closed at 32.18, which was also underneath of it. But that next green candle closed back above it. So to me, this level on the fib extension here is still holding a support, even though it traded a little bit underneath of it. It went back up, came back down and retested on the wick here, which still held support and still find buying interest at that level. So that gives me a little comfort to think that maybe this thing's going to start working its way to the upside and press forward. But same thing with the BTC and the ETH here. If you're buying, I'm buying that 10% in a bear zone. If you want, you could sell at the shallow fib if you want some small trades and then rebuy on a dip. But again, I don't have a lot of exposure on right now. So I'm going to hold the 10% like I did on BTC, hopefully buy into a new bull zone, press the position, get a good foundation for the next run to the upside so you can make some good money. So far it's holding. And another thing I like to see is you got a little bit of you got down into, whenever you get a little bit dipping down into below the bear zone, so you get a little bit oversold. You get this move to the upside to where the low kind of solidifies here. Yeah. This also happened in here where this low was in the overextended area, and then it made a lower low and then gave us a little bit of a divergence there. So to me, I like that. So it gives me a little bit more comfort to go long at that target. So with this happening here in the bear zone, and so far this support holding, that's lining up to where it should start to get a little bit more move to the upside and start, giving us a little bit more higher highs instead of these lower highs that we're getting so far. But again, risk management. If we get 3 settles underneath this, I'm out, and then I'll look for 30-15 to get back in, those kind of things. But then if you look at it on the daily tried to get into the bull zone and failed, got up there, still in the bear zone. It got up, it touched the threshold start right there, but didn't break through. So still bear. I don't have any positions on. Actually, I have 10% that I've had for a while, just to have some exposure. And that's what this target is up here at this 44.95, which was the trend line break objective that I've been waiting to see. So far it didn't hit, but I'm just holding on to it. If this ends up breaking down and getting me out, which would take, I don't even know. I'll probably just end up holding it. The 61.8% level is at 30.65. So when you look at this one over here, the 30.15 would be a buy if this ends up breaking down. So I'm just kind of holding on to that 10% in case this thing rallies on out here. But there is a target here if you want to buy on the downside going up. But right now I still have that 10% on with that trend-based target, or that trend line break target there at 44.95. So I'm just kind of holding on to that. Going on to gold. Gold kind of revived my January there. I had a good trade in the beginning of January, and then this move to the downside stopped me out on some stuff. I think I lost about 6-7%, but this gold move just wiped that all back, gave me some more. So nice little gold trade. The target hit here, just like we've been talking about, the 127 to 141 based on this previous bear zone. It's going to be that first line of defense to see if it's going to reverse or not. Hits the target, which was a high back here that fit really nicely in this area. It got up to 27.35, which was the top of this 141, which is nice. So it's working out really nicely with starting my fib right here, which is probably people I put charts out on Twitter. They're like, "Why in the hell did you start your fib there?" I said, "Well, I'm gonna have to go into a long explanation on why." But it's all based on the threshold theory, and that's where that starts. And it's really nice. It gives me a lot of confidence that the zones are right. If the price is hitting if it's hitting this level right here on my fib extension, that gives me confidence that the support and resistance levels are working really well. So target hit, took profit. Now the shallow fib is at 26.97. If it wants to drop down, I will buy it that shallow fib, with the next target being 27.93 way up here. Or if it doesn't come back and it wants to continue 3 settlements above this, I'll get back in and ride that trend up to the 200%, just like we talked about on those other ones. Looking at that 127 to 141 is is that really that kind of pivot area that I want to see if it's going to hold or not, to reverse back and give us correction, or it's going to continue. Given that it held right here and we're getting a little bit into overbought conditions, I wouldn't be surprised to see a nice little correction back to get some buy and then head higher. But again, it could just keep rallying and stay in overbought conditions for a while. So
let me show you some confluence. We were just talking about confluence.
Yep.
I've got this as a triangle here. And you can see my wave D target was the R1 pivot here on the daily, which was that 2737 area. And that's about where we got. And that's about where your target area was. And
Nice.
you said your pullback. It's a little bit, I've got a little bit lower. I'm looking for 3 waves pullback to finish wave E of the triangle to the daily pivot, which is right around 2666. But it's
Okay.
right there within that same area. And so, again, I've been looking at this as a triangle since, it's been in progress since August 30th here. So we've got A, B, C, D is likely done. Again, I'm like you. I'm also looking for a potential reversal here to pull back down toward that same kind of area you're looking at. For me, pattern target based on the height of this full pullback here is actually 2975, so pretty close to 3,000. Ultimately, I know you're looking at it's the lower time frame, so you're looking at a lower time frame target. But just mine real quick, there is that target there. The only thing that changed anything for me is, like you said, if it continues going up. So for me, if it breaks out above the wave B here at 27.61 and 30 cents, that would suggest maybe something like an A, B, C, D, and then E is completed here, and then we're heading up. So if we get that breakout there, we'll continue to look up toward that 29.75 target overall. But if we can get a rejection here, look for that pullback toward the 26.66, 26.90, that area there.
Okay.
And then we'll look for that move up.
I like it. I like the
a lot of confluence in there.
Your retracement was looking at what, 26.66, you said?
Yeah, about $25-$30 lower than what you were looking at. Yeah. It's the daily pivot. So yeah.
Yeah. So if you flip up my chart here, the one we were looking at, when you say 26.66, the shallow fib is at 26.97, but the bear zone doesn't start until 26.51. So if it gets down to 26.66, it still holds the bullish structure, even though it corrects a little bit further or lower than what I'm looking at. So the bear zone's still there, or at least the bull zone would still hold, even if it corrected back to that point. So the bullish structure on my stuff and your stuff would hold on a dip like that. Yeah, exactly. But then it's interesting that you're looking at the other one, but you look at the daily here. That's where I've been in this consolidation.
That triangle in there too. Yeah.
Yeah. Well, you have a little bit different based on your Elliott wave counts, but mine's more along the lines of it didn't go bull here, and I'm in this area of limbo. But the thing is if it, I would also think there would be a correction here to come back down while we're in the bear zone. But if we get back above this trend line that's touching right there, that will break us into a bull zone. On mine, it has to get above 27.40 and settle above that to get us into that bull zone. But it makes sense if it's going to hold there and come back down. So
again, it's within $20.
Yeah, I mean it's and the thing is even though this went into the bear zone here, there's a previous shallow fib on the daily here that never broke. So even though this corrected back, this is kind of what I talked about before was liminal space. It's this period of high emotion of what's going to happen. I don't know if it's going to break out upward or downward. I don't know what's going to go on. So your emotions run high. You're trying to figure it out, and you don't know which way it's going to head. But even though it broke down into this area here and went into a bear zone, it didn't break the bullish structure. So two things can happen. It could go bearish with a lot of momentum, and it would just flush it out and start heading to the downside, or it goes into the bear zone and goes into consolidation. And that's kind of what happened here, because when you broke into this bear zone, the ADX just kept falling. So you're not building any bullish or any bearish strength. So that's what led us into this triangle pattern, or whatever you want to call it. I got a symmetrical triangle here just to kind of show the liminal space of working its way toward the apex of that pattern. And I'd like to see a correction back down toward the bottom of that trend line, which would be close to the numbers that we're talking about, and then launch from the upside. But if that ends up breaking to the upside, then we got a new bull zone. I'll buy it, and then we'll head on to the races and get. And then the target of my daily is at 29.25. So I don't know where yours was, but I think it was pretty close to that.
29.75. Yeah. So again,
pretty close.
Daily $50. Yeah.
Yeah.
So,
well, in futures, that's a lot.
Yeah. So hey, listen, guys, if it hits his level and you think you want to hold on a little bit lower, you got a secondary target there that I've got up there that you can use. But again, mine is just based on the height there. It's just an initial pattern target. It doesn't have to hit. You just need, 5 waves up from the wave from the triangle completion. So, it doesn't have to, but we use it as a starting point when we're looking for a wave 5, or even just general price action trading. Guys, listen, hey, if you didn't know, when you have a pullback, if you measure that out with your retracement tool, which is what I do to get that 1618, the target area. So let me just show you here real quick, guys. If you don't know about this might help you out a lot. But when you have a pullback, whether it's down or the thing's going up and it's pulling back, upward or whatever, the ideal is you measure out the highest point of that pullback. So it'd be this pullback right here. And then what you do, you're doing this with not your extension tool, you're doing it with your retracement tool, and you're just adding the 1618. And so that way your pattern target based on the height of your pullback is going to be that 1618 area. So if you were to measure out from the bottom of that pullback, it would be 161.8% based on the height of that. And, that's what we use in Elliott wave, a quick way to get a wave 5 from a wave 4. But we also use it in just generic price action trading. It's a real quick, simple thing you can do. It doesn't mean price has to reach that point, but most often it does. And it gives you some place to start, at least if you're looking to, okay, if I want to get in, where is this maybe headed? It could go higher, it could go lower, but it gives you a place to start. So if you didn't know about that, congratulations, you're welcome. There's another way to kind of jump at that.
No, that's good stuff.
And use that in there.
that's good alpha right there for sure. All right, let's see.
The
DXY. Yeah, this is on the 4 hour. Went into the bull zone here. Hit the first target at the 200%. Next I'm kind of looking at is just the trend base extension here, which also hit the 61.8% level. Shallow fib is at 109.38, which is about to hit. So that would be a buy, and then the next target would be 110.3 while we're in the bull zone here on the 4 hour if you're trading it. The daily is bull zone, been in the bull zone for a while, hit the 200%, and then the next target is going to be the I haven't really updated this one yet. I was looking at this as a target, but what I would have to do is I'd have to go back in history here and see where this 200% ends up. And it looks like, let me see here. Let me move this line here. So yeah, that's just a straight shot. I'd have to go to a couple other time frames to figure out where it's at. But basically what I'd have to do is I'd have to go with a fib. I go back in history to go, since this target hit, I want to know where the next levels are. So I'm just going to put it in here just right now for shits and giggles, but just to see where the level would be. So the next zone would be somewhere right around 111 to 112, where the next zone would be. It's a bit of a mess, so I'd have to look at some other time frames to see where that target would be. But right now it hit the first target, and then the shallow fib is down here, which hasn't been hit yet. Like that. I mean, clean this up a little bit. So what I'm looking at is just kind of, this might be the next area. Hasn't quite got there. Almost got there, but on this latest run. But I'm not in it. So if it gets up to this target, look for the shallow fib as the fibs get higher, and buy on dips. The bear zone doesn't go in until 106.18. So 106.85 even if it dropped down to the shallow fib, it would still hold the bull zone. So that'd be a good buy in there on a dip if you want to trade that dollar to the upside. Moving on to SPY. Haven't been in this because it's been ugly as crap. So I got a target down here on the 200%, right around 5,800. That I would actually look to buy while in the bear zone, like we talked about before. But right now, it's kind of testing this zone right here on these lows. So 58.70, 850 is 3 settles underneath that, and the probability of getting down here is pretty high. Not that it can't get there on the next candle, but that's what I'm kind of looking at on the 3 settles, and buy the target down here. And then if it gets down to that point, to there, the shallow fib would move down to 58.60. So if you do end up buying here around 5,800, the sell would be a bounce to that point, and then maybe further downside. It really kind of depends, but if it gets down to the buy here at 5,800, and this gets into overextension, gets into oversold beyond the bear zone or whatever, well, it would be 59.02. So it would definitely be pushing down there. So the what you would want to do is probably sell into the shallow fib and then maybe have some further downside. But until then, it's just kind of waiting for that target to the downside before we do anything. So I'm just kind of waiting it out on that one. So that's where we're at on the 4 hour. But then when you flip over to the daily, we've been in the bear zone for this one too for a while. And I also got the target down here at the 200%. But again, the fib extension between 58.67 and 58.96 is still testing as that possible area of a reversal. Or if we get the 3 settles underneath the 141, then you want to look for further downside targets. So I'm not doing anything with any of the indexes like that because they're all very negative, bearish at the moment. So I'm looking for much further downside targets to even consider buying right now on that. So anything you want to show on that before I go on?
No, I'm with you on that. I do the market wrap every day. We look at the NDX, which is the NASDAQ 100. We look at the SPY and we look at the Dow, and they've just been sideways for like 3 weeks now. Potential further downside. SPY, could see a revisit to the previous all-time high around 560, 565 area if it breaks down here. But like you said, it hasn't really kind of broken down. It's just kind of testing this. If you look over, it's 1, 2, 3. This is the 4th kind of touch in this low area right there on your chart.
Yep.
And so, we could potentially see a bounce up out of that.
I mean, you're basically looking at this as consolidation zone, pretty much. This whole area right here, like this.
Yeah. So I'm just waiting a little bit to get some better look on it, on which way we're going with it. Wouldn't be surprised, again, if you need a narrative, Trump's inauguration's another week and a half or so from now. Maybe we
what is the date
go
today?
Sideways and downward into that or near that, and then kind of take off with it. But on the dailies are looking like they could have some further downside, but not like not like a new downtrend. Basically, just more of a correction.
Yep. Yeah. I mean, you can. Yeah. If we bring it over like this, you'll see a little bit more of like, this level right in here.
Yeah.
If it gets down to this point, that would be a spot that I would consider buying because this level should hold
support
if it wants to correct back and then head higher. Yeah. But we'll see. But right now, there's just kind of a hold and wait. Going on to some shit coins. We got XRP here.
How dare you? The XRP army's going to kill you.
Oh, the army's going to hit me up. Oh no, don't go to don't come at me. The went into the bull zone here a while back. Definitely got some momentum, cranked it up to the upside, hit the first target. I kind of cleaned this up. There's a whole bunch of stuff on here, but this target hit, which was an extent. This is a 127 to 141 level that hit. I mean, we can go back and it's way back here. I had to go way back in history because, well, it's not. There we go. It's popping up. I had to go way back in history to find some previous highs or whatever, because it got up to a certain point.
It's been a bit.
Yeah, it's been a bit, but it definitely came up and hit that the 127 to 141 zone, which again, line of defense. It was that first line of defense that held and worked its way down, hit the shallow fib, so which was also a buy there at $2. And now we're working our way back to the upside with a target at 365. So as it moved down and filled the shallow fib here, the bull zone held. Now the momentum's really low, so I can see us, staying in this area of consolidation here. It's almost like a little bit of like a, small little triangle pattern happening, like this.
Exactly.
And then this, like that. So if we're going to stay in this low momentum period, I can see it working toward the apex of this pattern and then eventually breaking out one way or the other, right? Now it could go all the way to the end of this pattern and still be real and low momentum, and it'll just kind of dribble out and do nothing. Or if it gets up, if it starts to break out to the upside or the downside, and the momentum starts to build on that break, or looking at volume and other things, then you'll get a little bit better picture of which way this is headed. But right now, being in the bull zone and everything holding, I do like the upside on this one, holding the buy at $2 with a 365 target. So might be a little while before it gets there, but you never know.
Let's talk real quick here on that real quick. So I said exactly, because that's exactly what I have here. I have a triangle. Now for those that don't know, in just classical charting, like what Peter Brandt does and whatnot, a triangle is basically by shape, more or less. And then it's always, it could break up or could break down. In Elliott wave, a triangle has a specific structure. It's 3 waves A, 3 waves B, 3 waves C, 3 waves D, and 3 waves E. Or, wave C or wave E can be a triangle itself. But the idea is it's a corrective pattern up and down. And in the case of a symmetrical triangle like this, it consolidates. So I would say that if this is correct here, and we've got 3, 3, 3, 3, and 3 here, finding support around that hourly pivot, we should be done with it at that point then. Based on the height, again, as I showed you all earlier, based on the height here, the highest point of this correction, that actually gives us a $3.74 target. So just right there again, above right where Fibo's target area is. So I would look at that range as the probable target area. Now, again, all we need is 5 waves up above the previous swing high. Now, the reason in Elliott wave why a triangle is important, it is a continuation of the direction of the trend. So the trend is up here, which means this is a consolidation before continuing the trend. So that's why we never say, oh, it's going to break down. If it breaks down, then it wasn't a triangle. Triangles can also, in Elliott wave, only happen on, it can't happen on a wave 2. It can only happen on a wave 4, a wave B, a wave X, and rarely a wave Y, okay? Because it is the last kind of pattern that you have going before. So if it's a Y, it's a WXYXZ kind of thing that you'd have the pattern in. But nonetheless, it is the last consolidation before the final move in the direction of that trend in the count. Okay, so it's a wave 4 here. That means the wave 5 would be the move up. Now we can overextend beyond that pattern target, but again, the pattern target is there to give you something to shoot for before price starts actually really filling out in any way to kind of figure out what you may have. So when I say pattern target, that's based on the height of the pullback there. That's usually where we look first. And then if you're doing Elliott wave, you'll count the waves as it's doing. Then you'll say, okay, do I need to kind of bring that down a little bit, or do I need to extend it higher as you get it? But Fibo's got his one, what'd you say, 365 target?
Yeah. That's the target I have for the bull zone I'm in at the moment.
So so I would look at least there, potentially 374, which is the pattern target based on the height there, and maybe even higher. Again, you can, a lot of times it's a 5th wave. If you get a lot of interest, the 5th wave can overextend. So, but as you can see here, what Fibo's looking at, what I'm looking at, again, almost lining up really, really close with what we're looking at here and the expectations. So
another thing, Chris, on your chart here, that low that you have between the C and D on the triangle, the low in between there, right there, If you take a Fibonacci from that low to the high at D, that E. See, I always like to take fibs inside the triangle too. And if you take that fib, that dip down hit the 61.8% level exactly as support on the way down to get E. So to me, I like that. Do you see what I'm saying?
Right here. Yeah.
So when I'm looking at the fibs, I like to look at the fibs inside the actual triangle itself, and wave E inside the triangle hit the 61.8% level perfectly.
Yeah.
On linear scale, not long scale.
Yeah.
We won't get into that, but
no, we won't get into it. We'll have to put out the boxing gloves and do the Gen X thing. And
no, I'm good with it. I mean, it's one of those things. Like if it works for you and whatever analysis you're doing, go for it. I don't care. I can't find anything for it to work for me.
See, and that's the whole thing. This is what what I'm a big champion about. As far as when we're teaching our students over there at the Trading Academy, is that listen, you're going to end up at some point, if you become a decent trader, you're going to start using indicators and things a little bit differently than maybe somebody else does.
Yep.
Because you'll figure out a way that it resonates with you, a specific setting, a specific way of its use. For me, one of those things is the RSI and the stochastic RSI.
Yep.
Most people won't use them together. They're like, oh, there's no use, blah, blah, blah. But in my mind, it works, right? The stochastic RSI is a derivative of RSI, which is a derivative of price action. So your stochastic RSI is going to be much more volatile than your RSI, but it tells you what's happening with your RSI. So it is the tachometer on your vehicle giving you the RPMs,
yep.
Whereas your RSI is your speedometer. So, the tachometer, the RPMs rev up as you're getting, as you're going faster and faster in that gear. And it gets to a point where you have to shift to a different gear and it drops your tachometer back down, your RPMs back down. And that's all we're really, when I look at the stochastic RSI and the RSI, in my mind, that's exactly how it works, which is why I use it together and it works so well for me. Some people will get it though, and it just doesn't click with them. But that's okay. That's okay. The goal is, I want you guys to understand here, and Fibble would agree with me here. The goal is not to say, oh, I'm going to use somebody else's system and that's the end all and that's all it is. The goal is figure out what works best for you. And it may be somebody else's system. It may be a version of somebody else's system. You may come in and learn Fibbo's system and you might make a few adjustments in it that work for you, that your brain gets it and goes, man, I see this happening this way and I can trade with this. So, don't think that you're just going to come in and learn somebody's system and that's going to be the end all be all. Most likely, if you become a successful trader, it's going to be because you've actually gone beyond their system. Their system's giving you a place to start, a way of understanding. And it works for them, but it may not work as well for you, or it may still work well for you. But again, and you're doing it, you're going to, get more and more used to the indicators and whatnot. And you may notice something that in your brain clicks something. And you go, well, every time this happens, this thing happens. And you notice that and your brain picks it up and you can do that. And really, once you're getting to that point, that's when you're really getting trading down. So just kind of some thoughts on that. I don't know, Fibbo, you got anything to add on that?
No, I agree with you. That makes sense.
Well, that was not. Anybody agree that did not sound very, very supportive? That was like, that sounds.
No, I agree. I absolutely agree with you. No, I have nothing to add there. To be honest with you, I really like the analogy you talked about with the tachometer and the actual speedometer. That's pretty interesting. But it is something like, it's really hard to teach experience. And I think that's what you're kind of trying to get at. It's like you could take a system, but when I have a system that I've been doing forever, there are gears that are going in your head that is like a tachometer and a speedometer, and the way I look at an ADX is going to be completely different than the way somebody else does. I look at an ADX indicator as like the heartbeat of the market. Like if a doctor went and did an EKG on you, they're going to look at your heart rate the last time they did it and the time before, and they want to see if there's any discrepancies, right? And if there is, then you need to dig deeper and figure out what the problem is. So I kind of look at the ADX in the same way as like the heartbeat of the market. And if it's looking different and something's changing than the last time it did it, or the last 3 times it did it, I need to dig in a little deeper to figure out what's going on. So that kind of thing. Taco meter.
Taco meter. That's right. The taco meter. We're in Texas down here. It's the taco meter.
Yeah. Yeah. The taco meter is what's going to be happening when I get off this call because I can go eat some lunch.
Y'all got tacos up there in Kentucky? Y'all know what tacos are?
I'm going to have to get somebody to snowmobile them to me. But other than that, I'll get. All right. Where are we? Solana. Bear zone. I went into the bear zone here. And set the fibs. Shallow fib right now is at basically 199.07. It did try to rally up here, and it got above the 61.8% level here, but failed to continue and break us into the bull zone, which the level it needs to get to is a little bit higher. As you can see back in history, it doesn't get into the bull zone. It's a little bit higher. So that was basically saying, hey, don't buy it yet. If you put this trend line in here, there's a little bit of resistance there. And then it's falling back to the downside. So in this case, I'm just going to be waiting for the start of the threshold back here at 146 is where my target is to the downside. We're at 191 now. That's a big move to the downside, but give it. I mean, not huge, but but given that we're in the bear zone here, it's still got a long way to go before it gets into oversold conditions. So to me, I'm not going to look for anything until down here. Or, of course, if it wants to rally up and get us into a new bull zone, that would be nice too. But right now, we're kind of working our way on this kind of this channel pattern to the downside here. So if we kind of continue to the downside, this will be kind of that area of to watch on the downside here is basically this.
Where's the You said if it goes to the bull zone, where's your bull zone? The 3 settles above what? Just so
good question. I don't have the indicator on this one.
Have it on there. Oh man, okay. So just honestly, it's just looking for the damn thing to fall.
Yeah, I didn't even care. I was just waiting for a movement to the downside.
Okay.
I didn't have the indicator on this one. My apologies. I'll figure it out. I'll tweet it out once I get it.
Do you hear that? Follow him, guys. He'll tweet it out. Follow him. Twitter.
There you go.
At FiboSwanny.
Yep. It'll just take me about 5 minutes to get it all set up, so I don't want to spend all the time putting it in there. MSTR is the other one that we're looking at. Yep. Bull zone, hit the target, took profit, came down, bought the shallow fib at 391. Decides to drop a little further, all the way down to 285 is a low, bouncing. But the thing is, it held the bull zone. So far, still underwater, but still alive. But the ADX is dropping, not showing a lot of momentum. So right now, the zone in here is between this 298, 391 zone, between support and resistance. Just kind of waiting it out, see what's going to happen here, if it's going to hold. But I can see a lot more consolidation in here. Kind of, what's happening with Bitcoin too, right? You're in this kind of zone. Is it going to break down or not? And if it does, then, you get stopped out. And if we end up getting into the bear zone, and again, I don't have the indicators on here either. A lot of times if I'm not really trading it very often or what, I won't be messing with it. But I would have to get a bear zone on this one. But most likely, if we get back down below this low at 285, it's going to break the bear zone, and then you're not, and then I wouldn't be looking at it until all the way down to 146. And that's pretty far away down there. So
pretty far. Yeah.
But right now everything's kind of hold the long target is 716 is the next one to the upside. So that's really all I got on that. So not much else. Hey, that's all I got for charts, unless you got something to show.
Mr. Smith is asking, do you ever ladder in buys on the way down if you are bullish, say 0.618, 71, etc.? But you don't, right? You just buy in or sell according to your system where those levels are, right?
Yeah, like here on what I'm doing here on the 4 hour, I am kind of buying in the bear zone if that's what he's asking. So I am going to buy while in the bear zone. That's not telling me it's bullish yet, but it's also I'm using the my analysis to give me the levels of where to buy. So I don't really have like a set rule on you need to buy here, you need to buy here. It's more along the lines of is there matching up between like the trend line break and the fib levels. If you start to see confluence of different ways to analyze and it's giving you a nice spot to buy, then yeah. Otherwise, no, I wouldn't be doing anything until it gets down to certain levels. It's really all about breaking the zone one to the other, and that's what really triggers my buys and sells when looking at threshold theory. Now, there's other things I'll trade doing different things, doing other things on my own, just kind of messing around. But when it comes to the system, it's really the break of the RSI zone comes first. Setting the fibs with the ADX comes second. And then after that is the previous zone extensions of where the targets are. So that I kind of stick to those rules and guidelines. Yeah.
Let's see here. Let's say Mr. Smith says, I make a plan and set a buy, but when I go immediately underwater, sell out of fear only to see it target. Yeah, to hit your target. Yeah. And that's what, we talk about that a lot in the Trading Academy, because listen, folks, at the end of the day, learning Fibo system, learning Elliott wave, learning Wyckoff, learning price action, all these things, they're easy enough to learn, right? The thing that's going to wreck you, first of all, is not using proper risk management. And second of all, not understanding or misunderstanding trader psychology, your emotions, stuff like that. And so, I often sprinkle in a lot of that when I'm teaching, because those are the things that are going to make, everybody's out here saying, listen, just learn this thing and you'll be perfectly fine. But that's not the truth, because you can learn a system. Fibo's system works extremely well. But if you get emotional and you stop following the system because you had, a couple of losses, well, guess what? You've screwed yourself out of it, right? It isn't that the system doesn't work, because the system is this trades over time, right? It's never, in trading, it's never about the single trade you're on. It's always about developing a system that pays you out over time, because you're going to have losses. Losses are inevitable. Nobody's 100%. Somebody that tells you that they're 80%, year after year after year is probably lying to you. You can have years where you do really well and exceptionally well, but the truth, the truth of the matter is you're going to be wrong a lot. So your system accounts for that, right? But the problem with most people is they come in, like, let's say you join, TWC, and you start learning Fibo's system, right? And when you learn it, it's at an area where price is kind of pulling back. So you're going to get stopped out of a couple of trades. Well, a lot of people, when they do that, they're so emotional. They don't understand what I just said here about systems and trading, whatever, that they're like, oh, it doesn't work. And they get freaked out and they get scared and they sell. But the thing is, if you use that system, the truth is you're going to be up over time. Fibo wouldn't continue using it year after year, teaching it, if it didn't continue to work for him, right? And he puts the trades out there, so it works consistently.
That's a good thing that you're saying, because if anybody joined basically the new year, this first weekend of January, I took some losses. I had about 3 or 4 trades where I probably lost, anywhere, I can't remember, 5 to 10%. Of those trades, not 5% or 10% of my own.
Not of his account.
No, just of those trades. But the thing is, if you came in and you saw 3 or 4 losses, maybe even 5 losses in a row, you're like, well, this guy's full of shit. But if you look back from October 1 to the last quarter, I was up 327%. Yep. So it was working really well on that long trade, on that long trend to the upside. But we did take some hiccups on this correction, and that's what it is. Small losses, large gains. You want to continue that pattern. So it really is about the recency bias is a big deal. Like when you start getting in on things and you're really focused on just what's happening right now, it can kind of throw you for a loop in your head, like what's going on. But not that every quarter I have is 300%. I wish it was, but that's not the case. But that was a good quarter. A lot of good futures hit on that run, but you're going to take losses and it's going to happen. You just gotta I mean, basically, if you start putting something together, definitely do back testing. Don't just look at the front and see what's going on. Look back and see what happened in the past and see how it works out. But any other questions or comments in there? I can't really see them as well.
Here. CNC Ireland said, great show. Andrew said, well said, Fibo. Let me see here. Frank likes my risk management approach. He says the must puts inevitable losses perspective and makes them affordable. And I think that's the important thing. FiboSwanny or FiboSnowy, if you want to call him that today, while they continue to snow there. He does have a risk management in the way that he trades. And that's why I had him develop the video. So, there on the first page of the Traders Club, TWC Traders Club, right there, he kind of explains that, listen, I trade in tranches and buckets and this and that. And, that's his risk management, right? That along with where his stop loss comes in and whatnot. My risk management is not specific to a single trading style. It's usable across anything, but it's a different type, right? It's a definitive. You shouldn't be losing more, especially if you're new and you don't know what you're doing, more than 1% of your account, 1 to 2%, depending on what you do, the 1% or 2% rule, on a single trade. In either case, that or the way that Fibo does his with the way he allocates his money into his trades, right? That risk management. The goal with either one is to make sure your losses are small, as Fibo said earlier. You want to have small losses because you're going to get wins, and your wins sometimes are going to be really good, but you're going to definitely get losses. The only thing that's guaranteed in trading is you are going to lose money from time to time. And the newer you are, the more money you're going to lose, and the more money you're going to lose it because you haven't figured out the risk management part yet. But the goal is to work with that risk management so you have a small loss when you lose, because losses are inevitable. And that way your wins are going to outpace those losses and your account can grow. That's the goal. It's not about the single trade you're on trying to get the absolute low to the absolute high, on that. So,
yep. I mean, a strong risk management plan will take the emotion out of things, and that's what you want.
But we're not saying it's easy, guys. Neither one of us saying it's going to do this for years. If it was easy, everybody would do it. Instead, everybody pretty much doesn't do it, which is why people end up out of the market very upset. And they say things like, "Oh, Wall Street took my money," or "Crypto whales took my money," or news determins where the market's going. They say all these silly things that we show time and time again. That those things aren't true. It's your inability to understand and control, or to understand your emotions so that you can notice them when they're coming up and you can defend against them. That's the real issue. Anyway, it is constant. What was that?
Here. I was just trying to look through here, see if there's anything that I missed. Or
I think that's probably about it on there. Right. And we're here at 12:30, so we can jump out there. I know Fibo's going to jump outside and go jump off the porch and backwards, land down and do like the snow angel. So I demand video if that happens.
That is not going to happen. I am staying in the house, and hopefully the power doesn't go out. That's all that matters.
No frisbee golf.
Actually, one of the guys actually asked me to go, and I said, "What are you, freaking crazy?" Then he called me a wimp. Huh?
But can you imagine having said yes and go out there and freezing while you're doing it, and then come back and the power's off so you don't have any heat in the house?
That would be terrible.
See, it's better just to stay in, enjoy the heat while you have it. If it goes out, at least you had it prior. You did go freeze your nuts off, right? Yeah. Exactly. Oh God, I can't believe I just said that. But anyway, okay. Listen, on that, I think we're going to get out of here. Listen, guys, we'd love for you to join us. We'd love for you to join us. TexasWestCapital.com. You can get in for $97 a month right now, guys. And as I've been mentioning, we've got a lot of huge things coming up over the next 2 months. That if you're getting in now, guess what? You're going to be grandfathered in at the current price, but the price is going to go up. And so, you can wait and you can pay the higher price. That's fine. But if you want to get in on everything that's in there now, which is pretty amazing content between myself and Fibo and Andrew and Vince there.
It's amazing. All four of us in there, and we all come from different ways of looking at things, and
yep.
Well worth the money for sure.
Oh yeah,
you should be able to
$97.
get that money back pretty quickly.
Yeah, it
I
takes
got a
one
couple
trade,
guys.
right?
I got a couple guys that messaged me and said, I got this shit paid for a couple of years.
See, that's the way it is, right? It only takes us one trade, but you can't be in that trade if you're not in there, right? So that's the way it is. But anyway, we're gonna get out of here. It's Friday. It's not snowing here, but it's raining and it's 40 somewhat degrees. It's cold for South Texas. If I want snow, I can drive 3 hours north to Dallas and deal with that nonsense, and I won't be.
Yeah, if it was actually 45 degrees, I might actually get in a bikini. It would feel so warm. It would feel
we don't need that. No. Get that picture out of our heads. You can't unsee it. What
not
you
happening.
About,
not happening. Not happening. But 45 degrees would feel so warm right now, because right now I think we're at 23 degrees. Feels like 19 because of the wind.
Okay, we're at 41. Feels like 27, it says.
Oh, that's cold for you, for sure.
Yeah, it's cold for us. Thank you for recognizing. I appreciate that. All right. Hey,
is your pool heated? Go jump in your pool.
No, it's not, unfortunately. No. And forget that. I wouldn't want to be out there. You have to get cold to get warm. No, I'm warm to get warm in the house, right? All right, listen. As always,
good times.
As always, remember, the only thing you control is how much you lose. Please keep working on that risk management. If you do decide to jump in to join us at TWC, man, make sure you say hi in the chat somewhere, man. Tag me, tag Fibo, say hi, tag Andrew, tag Vince. Say hi, man. We'd love to see you. Tag Sats. Sats would love to talk to you. He's my resident Austin guy, or even Mark from up there in Canada. So Frank, tag these guys. Tag Soren. Just let them know I said to tag them, and they'll be like, wait, what? And they'll be like, okay, no, that's cool. See, look, Scott even said, join, do it. So there we go. You guys have a great day. Have a great weekend. Trade safe. And man, oh man, I guess we'll see you guys next week. All right. Unless you join, then we'll see you in there and you get all those trades and education and all that great stuff. It's good stuff. Even if you just did it for a month, I'm telling you, be so far ahead of where you are right now. Anyway, all right. I'm out of here. All right, take care. Peace. Fibo, thank you, sir.
Yeah, you bet. Always a pleasure.
It's not FiboSwanny, it's FiboSwanny on X, guys. So make sure that you're looking for that, all right?
Yeah.
Take care, everybody.
All right, take care.